Hello everyone, George DeSantis here with a look at the market for the week ending Friday, July 19th, 2019. Actually, I'm doing this on Monday around midday, just after 12 uh, on the 22nd. Before we get into the charts, let's do the usual. Take a look at the disclaimer. Simply note that I'm not a licensed professional investment advisor. I'm a psychologist, but I do this for my own edification and post it on YouTube in case you guys care to take a look at it. So let's begin with a weekly chart of the S&P 500. So here's a weekly chart, one we often look at, a weekly chart of the S&P 500. So let's start at the top here. I usually like to look at the moving averages before I go to anything else. So we can see that the four exponential moving averages, the yellow line, it's above the 9 exponential moving average, the red line, and that is above the 30 weighted average, moving average, which is the green line. So insofar as moving averages are concerned, the weekly chart is still trending up. Let's look at the bullish scenario first, okay? So that's one aspect of the bullish scenario. If we look at the parabolic, which I plot now with a different set of parameters, these here, parabolic is still below the most recent bars. So that is indicating to us that there is no indication that we should reverse the uptrend here or think of a reversal of an uptrend here right now. I mean, that may come later on, of course, but right now we're still in an uptrend according to parabolic. Moving averages, uptrend, parabolic, uptrend. Remember some time ago I pointed out that I think there is a head and shoulder, a reverse head and shoulder pattern. Head, shoulder, shoulder. And we calculated a target from that to be about 3,100. I think it was 3,100. And in any case, we can do that again. So those are some of the bullish cases here. Um, let's go down to, we leave the MACD for a while, but let's go down to RSI 12. RSI 12, continuing with the bullish scenario, is still above 40%. So that indicates we're still in a bullish uptrend. Williams percentile with the 30 period that I use is still above that magenta line, the minus 50 line. And notice that since it crossed above it here, the market has continued to trend up and it's still healthily above that line. The sum of the rate, Jerry Appel's sum of the rate of change indicator, which I wrote in here, it's still above 4%, trending down a bit, but still above 4%. So those are the bullish indications that we see here. Now let's take a look at what we have in terms of a bearish indication. Bearish indication is this bearish divergence of MACD histogram. For those who are new, it's moving average convergence divergence. Jerry Appel designed that indicator. And that indicator is telling us that we have a bearish divergence of MACD. As price made a higher high here, MACD histogram made a lower high, and also there was this necessary condition, this breaking of the back of the bulls, where we get these red histogram bars. So this is what we have to worry about, this bearish divergence of MACD. Now, as I mentioned a couple of weeks ago, we could probably override this bearish divergence as long as price continues to go higher. Then the histogram will get larger and larger and overcome this height here. So we have to wait to see how this plays out, and that's where the bearishness comes in. Let's take a look at the daily chart. So this is a daily chart of the S&P 500. I want to show a couple of bullish indications first. First of all, we have the 9 is still above the 30, but notice that the 4 EMA is now crossing below the 9. Insofar as bullishness is concerned, we are in what we refer to as a buy zone. That is, price is now closing between the 9 EMA and the 30 weighted moving average. Why do I say that? Because since the 9 crossed above the 30 here, we had one close below the 9, between those two lines, between the 9 and the 30, and we rallied from there. This is usually a buy zone. The first time that the price closes within 9 and 30 is usually a very good buy indicator. We have the next time it occurred is here. And once again, we are continuing to remain between the 9 and the 30. Now the question is, do we move, do we get this buy zone holding up and we move higher from here? Or do we continue to break down as we see, because the 4 is crossing below the 9 right now? Big question. That will be resolved, of course, in time. So let's take a look at some of the bearishness now. We have parabolic above the most recent bars now, the parabolic dot here. And so we have a downtrend according to parabolic on the daily chart. But the weekly chart overrides the daily chart. If we have an uptrend on the weekly chart, we usually lean more heavily on that data than the daily chart. So now we turn to the MACD histogram, and you can see that on the daily chart, the MACD histogram continues to trend down. It was way up here, continues to trend down. It is now in bearish territory below the 0 line. And if we look at RSI 12, RSI 12 is coming pretty close to that 40% line, which is the critical level. If it crosses below that 40% line, we may begin to entertain the likelihood that we are now switched to a downtrend. Williams percentile continues to remain above the magenta line. And let me get rid of this. And Jerry Appel's sum of the rate of change indicator is now below 4%. It's at 3.7. So the daily chart is showing us some of those conflicting indications, just like the weekly chart did. And that's why I think we're noticing a pause in the market here at this time. Now I would like to answer one question concerning the daily chart, one more question, and that is, well, George, if we continue to break down, as you mentioned, because the 4 is crossing below the 9, and it looks as though MACD is dropping now into bearish territory, how far down will we go, or might we go? Well, I plotted the Fibonacci retracement levels here. This is the first significant one, which is 23.6 on the Fibonacci retracements. So that would be at about 2950. See, 2951 or so. And if we went further down, we go to the 38.2 level. That's the next Fibonacci retracement level. That'd be around 2900, 2908. And if we went to the 50% retracement level, that would be 2875 or so. So I just wanted to point that out. Those are some of the things we can expect if we start breaking down anymore. Now, before we turn to individual stocks, let's take a look at some of these charts we visited before or in the past. This one here is the new high, new low index. It's a daily chart, but it shows that we're still above 0, so we're still hitting new highs here. The next chart we could look at is the S&P on the impulse indicator. You know, the red, green, and blue bars. When the bar is blue, as it is now on a weekly chart, we can go either long or short. That really characterizes what I've been speaking of. In other words, we're at a critical juncture here where stocks could continue to go down a little, or they might just turn right around and keep going up. So we're not allowed to go short. So there's more bullishness than bearishness here. And the other one we might look at is the percentage of stocks in the S&P 100 above their 200-day moving average. Yes, we pulled back a little bit here recently, but we're still pretty bullish looking on this chart, except for MACD. You see how it's trending down? Don't like that, but basically it's still in bullish territory. So let's turn to some individual stocks. I have a list here of stocks that I either own at present or owned, or I'm looking to buy again, or whatever. So these are some stocks that I'm interested in. And what we have here is a checklist. This checklist is a recent addition to Shaken's software. What it does, it gives us a quick bird's eye view of the 6 powerful indicators here: the power gauge, the relative strength, the industry strength, etc. And then in terms of timing, whether it's overbought or oversold, strong long-term trend, or money flow. Now you can see that on Cadence Design, we have 6 out of 7. Now it's neutral on oversold, overbought, because it's neither oversold, overbought, or oversold. The 70% line is overbought, the 30% line is oversold, so it's right in the middle. But this is a good one to own. I own this one. I still own it. Let's take a look. I don't own this CMCO, which is a machinery company, but look at it. It's looking pretty strong here. It's a $40 or so stock. $40 down a little bit right now, but you can see that it checks all the check marks. I'm not saying you should go out and buy these things right away. I'm just showing you how I use Shaken, okay? CMI I own, and it's neutral because it's now, it was very oversold, and now it's in the neutral territory between 70 and 30. Microsoft, another one I own. In fact, I just bought some more recently. And you can see how that looks. The overbought, it's in neutral territory because it's coming back from an overbought area, but it hasn't quite reached the oversold area yet. Money flow is a bit neutral now. Synopsys, software company, you could see it's in the neutral zone, but I still own it. Comcast, overbought, so I own it, but I would continue to hold it here. It meets most of the other criteria, all of the other criteria. iPay, I just bought some more. I love this one. It's a payment system, but as opposed to owning just Visa or MasterCard, which I do, or any of the other payment systems, PayPal, etc., you get a whole basket of them. What's not to like? Look at the chart. It's up about 40% for the year, I think. Here's PayPal. PayPal, one of my favorites, still own it. You could see that it's overbought right now, but it's one of those that I would not sell. You see how the relative strength keeps strong here. Money flow came down a little bit, but it's still bullish. This is the SPDR, which is the ETF of the general market. I don't own it, but I simply leave it in this list. XLK, I don't own right now. I used to own it back in 2018, but I see the money flow is down a little bit, but it's also in neutral territory. We don't have those 6 factors here because it's an ETF. MasterCard, it turned neutral on the power gauge, but apart from that, it looks damn good. Look at this uptrend here. So I still own MasterCard, and Visa, another one that I still own. So those are some of the individual stocks that I wanted to take a look at. What I did was this checklist here, okay, that gives you these 6 powerful factors. What I did was I searched different populations. For example, a checklist for growth stocks, and that gave me all of the growth stocks. When it searched for all the growth stocks that are looking pretty good on these 6 criteria. So if I click on CMCO again, you'll see that it looks very powerful, very good, and it's now oversold and ticking up. Okay, you can see some of the other ones here. Let's see, CNOB. See, they're all looking pretty good on these criteria. So then I went to the NASDAQ and did the same thing. I only found one stock on NASDAQ 100. And then I went to Russell, and there's what I found. Well, we're coming to the end of the 15-minute period, so I'm going to have to call it a day here. and I hope you had a good weekend. We'll talk to you next week about this.